Hi everyone, Ali here again. So today is March 23rd, 2020, and I just wanted to do this video update so we could see where we ended up today and how was the trading activity today. So before I get into that, I just wanted to touch base on the fact that about myself. I think I mentioned in previous videos I have over somewhere around 20 years of stock market experience, during which I have experienced the dot-com bubble, I've experienced the financial crisis. I lost a lot of money during the dot-com bubble. And then at some point in time, I was also a stockbroker, a licensed securities advisor with the Series 7 and 63. Uh, but the reason why I've been in the stock market is because of my sheer um, love for finance and my interest in finance. So why did I start doing these videos? I am not looking for a lot of following on YouTube. All I'm doing, I started doing this because I felt that there are a lot of people out there who might need help understanding the market, understanding some of the factors that I've understood over many years, and they could benefit out of these videos. So that's the reason why I started making these videos. However, I think they've helped me more than you can imagine. As I've mentioned, just as an example, as I've mentioned that I started buying somewhere over here, thinking that this small pullback was going to be a support over here, and this could be a continuation of this rally, and I was buying the dip. However, I was not to the detail that I'm doing right now, and I'm preparing these charts and I'm preparing these videos. This is forcing me to analyze this information, which I was not doing and I wasn't thinking to do. So it has definitely helped me. Why? Because at this pullback, I did some buying, but then I stopped. I stopped buying, and now I'm going back to the basics. I'm sticking to my rules, and I'm waiting for confirmation for this stock market to recover, and then I'll start buying again. So, therefore, I'm not ready to call a bottom. As you might have seen that from my previous videos, I'm a big believer of a moving average, right? So you can see on the chart, all we are doing over here on the chart is these candles are representing a price. This price is being generated by a willing buyer and a willing seller to trade a stock at that price. Now, when we can just plot this on a chart, and all we have over here, this black line, is a moving average, and this moving average, when it's sloping upwards, it's showing us a trend, and it's the trend of the prices, which means the price is rising. So, do you want to own a stock or an index or houses or whatever you want to own in life? Do you want to own them when the prices are rising or when the prices are dropping? So that's where we are right now. We had this great bull run for the past 12 years, and the prices have suddenly started dropping. Let's say I had no other information. I lived in a vacuum or in a bubble, and I had no other information what was going outside in the world. And I'd say, all right, the prices are dropping. Something must have gone wrong. Let me just stay outside of the stock market, look at how far these are going to go, and then I'm going to start buying again. But as we all know, we have more information than just looking at this chart, right? What information do we have? There is a virus outbreak, it is a pandemic, there have been, it's very infectious, a lot of people are getting sick, a lot of people are dying because of this, right? And as a result, countries around the world are restricting people at home, and there are not enough testing kits out there. There isn't a vaccine out there that could vaccinate you from this. We don't know how many people by the end of it, whenever it ends, how many people are going to get infected, how is it going to disrupt our lives, how many businesses are at the brink, like even before this, right? How many, because you see this price inflation, these prices rising. Now, same is the case in real estate, same is the case in rent inflation. rents are pretty expensive for commercial properties or for rental properties, for residents to live in. So if the commercial rents are so high, and there's, for instance, there is a restaurant which is running, and the restaurant was barely surviving with the increase in minimum wage going up to $15 per hour, and exuberant amount of rents and insurance and all those things. Those businesses, as soon as this outbreak happened, as soon as government started saying, okay, you got to minimize the activity, you got to shut down close down the facility for the time being. Anyone who was at the brink of shutting down their businesses, they're shutting down their businesses, right? So let's not be naive about it, and these things are not going to change overnight, right? We don't have a vaccine. We're not going to have one tomorrow. All of a sudden people are not going to start leaving their houses. I've been in my house for around 10 days now. I've barely moved my car. I am not pumping gas in my car. I'm not going to the mall. I'm not shopping because I'm not going to work. I'm not shopping online for clothing. I'm not booking a trip. So these things have a ripple effect in our economy. So coming back, to the market, we saw this. This is a monthly chart. We're seeing this drop, right? And this we broke this trend line on Nasdaq. We found some support over here today. Here is S&P 500. You'll see, if you've been following, you'd see that I've been building this box around the activity between this red line and this green line, the first green line over here. And I've been building a box over here showing that we were finding support around the 2018 low of S&P 500. However, we were resisting on this 12-year trend line, that we've clearly broken it on S&P 500, and we need to go above it before we start seeing recovery. But we will see more information in the following charts. And this is 2008, right? And the market started going down like this. I added two indicators over here. Here's RSI sloping. Over here on the right, we have RSI sloping. It's still not oversold yet. And over here, we have MACD, which is a moving average convergence and divergence. And that's, there is a big gap between the buy line and the sell line. And over here, it just started. And we have just one bar over here on the negative volume. Now here's Nasdaq. I've done the continuation of this box. The good thing is that we had these long candles, and today was a very volatile day, as that's becoming a norm now. So it was a very volatile day. It did come down and tested 6,800. This was a support line, bounced back, and ended up somewhere in the back in that box, right? So Nasdaq, which we know is a tech heavy, and a lot of biotechnology companies. So it bounced back. So tech is looking stronger, but the overall market, which could be S&P 500 because it has many other names in it, right? So this was the box that I had been building last week. And this is how we had a huge drop on Friday as opposed to rallies on Fridays prior to this. This moving average is chasing the price down, right? So it's a 10-day moving average. So it's adding up the 10-day closes and dividing over 10, which means it's suggesting that as those 10 days are passing, this moving average, the average price is continuing to come down. So we need this to flatten out. We need these prices to go up and eventually cross this moving average. Until that point, we don't have a trend reversal. And how interesting it was, we traded quite a bit, right? It's a pretty long candle. We recovered a lot of it. At one point, there was it went into green. However, we closed somewhere in the middle. But we never entered into this box where we ended up last Friday. So technically, I am not still not seeing a reversal. So fundamentally, right? I've been focusing all my videos mostly because on price action and technical analysis. Fundamentally, this is something. This is a chart which I got from macrotrends.net. Current S&P 500, 500 companies of S&P 500. Current price to earnings ratio is 16.8. When we started dropping, we were somewhere around 22, 23, and we are at 16.8. This is 2000, year 2000. As you can see that and I've drawn these two circles. This was March of 2000. This was the peak of dot com before the dot com bubble. This was the rock bottom in March of 2003, and you can see that how um, price to earnings ratios started going higher as the time progressed. Why? Because there are two factors in this ratio. There's price and then there's earnings. As the prices started coming down, because this is the peak and this is the bottom, as the prices started coming down, the denominator in this ratio was decreasing. So if the price is coming down and earnings is coming down, and if the earnings is coming down faster than the price, this ratio is going to start increasing, which suggests that things are still expensive. And over here I have the peak of 2008 financial crisis and the bottom of March 2009, and you can see that how the price to earnings ratio became worse as the time progressed. But maybe there were signs that the market was seeing, plus there was a lot of quantitative easing, which the Fed is doing right now as well. But who knows? The results are still to be seen, and the price to earnings ratio dropped significantly because the earnings started returning. Um, so just wanted to point this out that if people are just getting excited because things are getting really cheap on a fundamental basis, there is a very important factor in this ratio, which is earnings, which no one knows how they're going to be during Q1 and Q2. You can go online and you can check. There are a lot of companies that have come out and said we don't know how our earnings are going to be. So just to pick like top companies in the US, instead of going to S&P 500 or Nasdaq, I just went to Dow Jones. It is an index of 30 companies, and uh, chart, or whatever you want to call it, the schedule, is showing you the top 25. I took it from Morningstar. This is showing you top 25 holdings in Dow Jones. This is the data is as of March 20th, on Friday last week. And you look at these earnings, right? Some of them are getting to based on these a lot of these companies, like for instance Apple or Visa or let's say some others might seem that they're getting cheaper because these companies still have a lot of growth in them, right? However, you can see that there are some companies like Visa, it's trading at 26 times earnings. Microsoft is trading at 24 times earnings. Procter and Gamble, although right now everyone's short of toilet paper, that's why everyone's buying Procter and Gamble, maybe because toilet paper is very important in our lives. So it's trading at 58 times earnings. Banks generally trade in single digits, so no surprise there. But the main factor over here is in price to earnings. Is we know that the prices are dropping, but until we get Q1 and Q2 earnings, these numbers are going to change. So I'm not getting excited right now to start buying immediately. I need to see trend reversal, and I need to be disciplined. And I'm glad that I'm making these videos because it's helping me a lot. And I hope in turn that these videos are helpful to you too. Thank you very much. Wish you guys all the best. If you are liking this content, please subscribe to my channel and hit that bell icon so that you guys can get an update when I do post these videos. And wish you all the best. Bye.